Welcome back to the Crypto Clown World podcast. I am your host with the honks, Jason Bruce. We're honking back in on the 7th of July, 2024. I apologize, it's been a few weeks since we've checked back in with you, but I do have my esteemed co host with me here, Mr. Christopher Lundy. How are you doing today, sir?
I am trying not to live after midnight like Judas Priest. It's been quite a lot of research and in our little shall we say furlough. I wanted to make sure I was on top of things, so I was living after midnight for a little bit.
Yeah, that's been my curse since I was probably in diapers, man. I'm quite the night owl. I'm still trying to see if I can reprogram that a little bit, smooth my sleep cycle out. It's a battle. So
Speaking of reprogramming, our top story will go over that for sure.
yeah, there we go. So I guess we can just lead right into that. I'll let you jump into the news. We'll see what you got after a few weeks off on the podcast here, and I'll jump into my TA after you give us the skinny here, sir.
Excellent. Well, let's kick it off then. Thank you, Jason. Okay, so our top story for today comes from dual articles from both tomshardware.com as well as the New York Times. This was published on Friday of last week. So, what's going on here? Well, we have been talking a lot about artificial intelligence on the podcast over the course of the last couple of months. And I have also been stating, that there's been lots of overinvestment in AI, especially in the S&P 500 in relation to Nvidia's market cap. Well, we got some interesting news in the AI world, ladies and gentlemen. OpenAI was hacked, revealing internal secrets and raising national security concerns. Year-old breach was not reported to the public. Here's a leader. A hacker breached OpenAI's internal messaging systems early last year, stealing details of how OpenAI's technologies work from employees. Although the hacker did not access the systems housing key AI technologies, the incident raised significant security concerns within the company. Furthermore, it raised concerns about the U.S. national security, reports the New York Times. The breach occurred in an online forum, ladies and gentlemen, an online forum where employees discussed OpenAI's latest technologies. An online public forum. While OpenAI's, well, I don't know if it was public or private based upon the details of the article. Let's continue. While OpenAI's systems, where the company keeps its training data, algorithms, results, and customer data were not compromised, some sensitive information was exposed. Now, as of April 2023, OpenAI executives disclosed the incident to employees and the board, but chose not to make it public. And keep in mind, ladies and gentlemen, under federal law, you are required to make any breach notifications public within a set time frame. So, with them not reporting this, they broke federal law. Okay. So, what does this mean? Well, this means that any time that there is a major technological failure in any type of big tech institution, it is always swept under the rug so that damage control does not become a problem for them. Unfortunately, when you engage in these types of actions, it does two things. Number one, it undermines confidence in the product. Number two, it calls into question the priorities of the board. And number three, it calls into question the operational security of the company. And considering the horrifying security issues found with WorldCoin's orbs, to countries banning them from operating entirely, even being placed under investigation by governments uh, as authoritarian as the United Kingdom, placing them under investigation for privacy concerns. Maybe they're concerned about their own privacy in the halls of Westminster. It's entirely possible. So nothing is unhackable, ladies and gentlemen. Okay, and this is proof of that. And just one more detail from this article. There's one individual program manager, a technical program manager at OpenAI. His name is Leopold Aschenbrunner. Uh, criticized the company's security measures, suggesting that they were inadequate to prevent, quote, foreign adversaries from accessing sensitive information, close quote. So, what does that mean? Well, that means that if I'm at a company and I've got inside intel from a technical program manager stating that this information could be, beneficial to adversaries outside of the, shall we say, domestic entity at which the company operates from, then that means, in my view, that perhaps they're put there on purpose, or there are adversaries that are taking care to make sure that that is in place. That's a potential outcome. That doesn't mean that's what they're actually doing, right? But this type of interplay becomes much more of a plausible thesis whenever you are, as a company, not even reporting these types of major breaches. Ladies and gentlemen, people have been using ChatGPT as if it's infallible. Your queries are not safe on ChatGPT, ladies and gentlemen. And let's not forget that the former head of espionage at the NSA has now been employed by OpenAI. So keep that in mind, ladies and gentlemen. Don't fall for trends or influencer mumbo jumbo. Don't do it. Do your due diligence and be happier. Moving on. Next article comes from Zero Hedge, and this is big news, ladies and gentlemen, for geopolitics. So here is the title of the article. It's published on July the 1st. The Arab League suddenly revokes Hezbollah's terrorist designation. This is July 1st. Here's a quote from the article. Quote, while some Western countries have ramped up sanctions against Hezbollah amid a daily missile fire on northern Israel, the Arab League has issued a surprise reversal of its terror designation. The individual regional organization, which is akin to a, quote, Arab UN, close quote, will no longer classify the Tehran-backed group as a terrorist organization, Egypt's Al Qahira news channel first reported. Spokesman for the Pan-Arab organization Hossam Zaki explained of the reversal that during a visit to Beirut that, quote, in earlier Arab League decisions, Hezbollah was designated as a terrorist organization. This terminology was reflected in our resolutions and led to the severing of our communication with them. Well, what changed? Well, Israel decided to annex the entire West Bank in violation of the Oslo Accords that were signed in 1994, essentially violating the terms and conditions of that agreement. So that means that the Arab League, keep in mind the Arab League, ladies and gentlemen, they lined up alongside Israel against Syria. And now they're revoking Hezbollah's terrorist designation. This is very interesting indeed, especially considering that there is lots of interplay between certain Arab states and Israel and Lebanon, where they're trying to play either one, play both sides, or two, benefit financially from the chaos that's erupting in the Eastern Mediterranean. And there are others that wish to stop the violence either through diplomacy, through deterrence, or through military force, or a combination of the three. So I would expect to see new economic actions follow this as well as additional troop movements, because this means that if the Arab League does not designate Hezbollah as a terrorist organization, they're de facto getting into a situation where they are tacitly supporting them and could even supply them with additional troops. And there's already been talk of Afghani troops, Iranian troops, openly by the millions wishing to volunteer for such a conflict. So I expect the heat to be turned up on this pretty considerably unless there are effective countermeasures in the diplomatic arena that put a stop to it. And I think this is one of those to put pressure on Israel to kind of back off a little bit. Moving on. Speaking of peacekeeping efforts, this kind of dovetails into the next article pretty seamlessly. Malaysia has joined Indonesia in offering peacekeepers for Gaza, and this is according to an article on The Cradle, which is a investigative journalism conglomerate news site that focuses primarily on the Ummah and the Middle East in terms of its writing. And here's the leader. The Prime Minister of Malaysia, Anwar Ibrahim, announced on July 2nd that his country is ready to send peacekeeping forces with Indonesia to ensure a ceasefire in the Gaza Strip. And he also stated that he had a phone conversation with Indonesian President-elect Prabowo Subianto, explaining that they, quote, discussed the attacks on Palestine, close quote. He stressed that they are, quote, ready to send peacekeeping forces to Gaza in cooperation with Indonesia if the United Nations requests it. Okay. Now, this is requesting it. So they are waiting for the UN to actually come in and say something about this. They're not obviously going to force the issue because they're halfway around the world from the Levant almost. Now, he also confronted Joe Biden directly to his face recently, where he stated, and I quote, and this was on November 19th of 2023. He stated directly to Joe Biden, I quote, "You ask us to condemn Russia and Ukraine, but stay muted on Israel's atrocities of killing women and babies in Gaza," close quote. And that must have had Mr. Biden a little taken aback in his chair. So what does this mean? Well, this means that Indonesia and Malaysia have significant military and naval power and are, I would say, cautious in terms of their rhetoric in this context. But there have been multiple instances over the course of the last 25 years in Southeast Asia where there have been efforts to put a stop to the conflict in the Levant unsuccessfully. And this is one of the reasons, in my perspective, that these countries are getting more aggressively behind and more formally behind the BRICS alliance, simply because we're seeing countless countries wanting to join. So I would expect this trend to continue, and more Southeast Asian countries will eventually join the fold. But I think that it's going to require the how should I put it, the focus of Russia in developing their transit corridors with Afghanistan, because they have to have a port to resupply themselves outside of the conflict zone, as well as to continue economic relations with Southeast Asia in the event of catastrophic global war breaking out. And as I mentioned in previous podcasts about bamboo diplomacy, well, the bamboo diplomats are starting to show their hand by saying, we want to do bamboo diplomacy. We want to kind of flow with the wind on this, but we're not going to simply sit back and watch our brothers and sisters be massacred, essentially. So I think there's a little bit more soft power that's being granted to Southeast Asia as a result of this. So I would expect to see that continue. Moving on, we've got a couple of articles from Nigeria in today's show, and this one is from moneymetals.com, and this was also published July 1st. Even Nigeria plans to bring gold reserves home to minimize risk. And this is, again, Money Metals article. Here's a quote from the article. According to a report by the Star, Nigerian officials decided to repatriate the country's gold in April, quote, to mitigate risks associated with the weakening U.S. economy, close quote. That's a jarring revelation, ladies and gentlemen. This means that Nigeria thinks that the U.S. economy is about to crash and that they might try to steal sovereign gold holdings or repatriate them for their own use, or read stealing them. Why is this important? Well, or why would I even think this is possible? Simple: the seizure of Russian assets and the granting of those assets to Ukraine. Countries are starting to realize that they cannot no longer trust the United States to be an honest dealer in business. And this is the result of that. Expect to see gold reserves go down. I think that gold reserve publications, especially as it relates to the United States, are anything but accurate from a public standpoint. Why? Because I don't know how much of that is commingled with other countries' gold. I simply do not know. But as the rule goes, possession is 9/10 of the law. If you don't hold it, you don't own it, ladies and gentlemen. There's one other piece of information from this that I think is very important to cover. Now, the United States has more than 8,300 tons of gold in its reserves. Nigeria has 21 tons of gold in its reserves. So it's a pretty big difference. Now you get an understanding as to why Nigeria decided, maybe CBDCs and going along with the West isn't such a good idea. We need more gold, and we need it fast in order to meet the reserve requirements that are likely to be in place on the BRICS systems when they come into fruition. And there'll be more on that during the show, which leads into our next article from Watcher Guru. And this is from JP Morgan, of all places. JP Morgan has predicted a huge U.S. stock market crash. Okay, here's the leader. This is published on June 30th. Leading global investment bank JP Morgan has predicted a major U.S. stock market crash. The bank remains cautious on the S&P 500. We'll go over that later in the show, ladies and gentlemen, about the S&P 500 because it hit an all-time high this past week. Continuing, the bank remains cautious on the S&P 500 index, noting that a, quote, 20% downside, close quote, could be on the cards. I think that's an underestimation, frankly. Continuing, JP Morgan's doomsday stock market prediction comes when BRICS is looking to uproot the dollar and damage the U.S. economy. The U.S. economy will lead to its own undoing, with BRICS having little to bring it down, according to JP Morgan. The banking firm noted that the largest 20 U.S. stocks have surged more than 27% in value year to date. The stocks have outperformed the S&P 500 index, which surged nearly 16% year to date. Yeah, you heard that correctly, ladies and gentlemen. Just 20 stocks outperformed the entire S&P 500 index year to date. If that doesn't tell you that we've got a very serious fiscal crisis, start paying attention, because anytime you have a very small number of stocks on an index that contains less than 5% of everything on that index, that means that you've got malinvestment targeting very few companies. And what was the malinvestment we were talking about? AI. It's all coming together. Okay. And heard it here first or somewhere else similar to us first. Moving on. So this is an interesting story, and this is out of Italy. Police have raided an undercover luxury handbag operation from handbags that were being made by exploited workers in Italy. Now, authorities raided factories and found Armani, Dior bags, being made by Chinese workers that were in the country illegally, who slept in the workshop and made between €2 to €3 per hour. Excluding raw material costs, Dior paid a supplier $57 to assemble a handbag that sells for $2,780. While Armani bags that were sold to customers for €1,800 cost €93 to make. And both companies have been placed under Italian court administration. Okay. So why do I find this to be important? Well, this means that the slave labor situation that was exported so aggressively to South Asia and Southeast Asia by the United States over the course of the last 25 to 35 years is now making its way into Europe. And if it has not already made its way deeply into Europe and the United States. Why? Because standards of living are increasing in Southeast Asia rather than decreasing. From previous shows, I've mentioned that Indonesia is expected to see at least a 30 to 35% GDP spike between now and 2028. And this obviously affects their profit margins. Well, most of the profit margins for most of the things that you're buying in high-end luxury places, ladies and gentlemen, are made by slave labor. And you're basically paying the piper to carry around something that costs less than $100 to make. So just because you have these lovely Gucci or Giorgio Armani stuff, these aren't economies. Okay. They're no different from blood diamond mines in Africa. So be smart with your purchases. Don't support companies that do this. Moving on. And I covered this quite a few times over the course of the last couple of months shows about the Israeli port of Eilat. Well, big news out of that, ladies and gentlemen. Israel's port of Eilat in the Red Sea has begun bankruptcy proceedings as a result of the Yemeni blockade. So that means that that port is no longer going to be able to accept ships for two reasons. One, they don't have the money to continue to operate. And number two, because it's under blockade. Israel has 3 ports. They just lost 33% of their entire port capacity in less than a year. Do the math. 2 more years, they'll lose it all. So we've got a situation in the Eastern Mediterranean in terms of transit. And essentially, the Red Sea's become a zone where 92% of all traffic that runs through it are from Russian and Chinese ships. And the Suez Canal is now under BRICS jurisdiction. This is another example of the new global system coming into view and taking shape before our eyes. The era of impunity is coming to an end, ladies and gentlemen. And that can be a good or bad thing depending on who you ask. It will have both positive and negative consequences in the short term, more positive consequences in the longer term in terms of reorienting business to be more than just, shall we say, an exchange of goods and services, but an exchange of cultural value. And you can't exchange cultural value whenever you're massacring your neighbors. It's not possible. It's going to lead to massive political capital loss. Moving on. And we have seen some interesting aspects about, especially in Africa, about the electrical grid, especially with load shedding problems in places like South Africa. And I thought that was unique to South Africa. Well, apparently it's not. Africa's richest man came out this week and slammed Nigerian policymakers over their shoddy electric grid. Now, Africa's richest man, his name is Aliko Dangote. And this was at a speech at the Manufacturers Association of Nigeria Summit in Abuja. This was on Tuesday of last week, titled, quote, Rethinking Manufacturing in Nigeria, close quote. He stated, among other issues, that, quote, import dependence is equivalent to importing poverty and exporting jobs. No power, no growth, no prosperity. Similarly, no affordable financing, no growth, no prosperity, and there is no industrialization without protection, close quote. The speech has been very well received by Nigerian netizens as a result. So, and some comments include as follows: foundation of development is built on electricity. No nation can progress without power. However, Nigerians prioritize tribalism over confronting evil. Powerful words. Here's another quote from the speech. That is the more reason why we need you within the power sector. We're inviting you to please come and explore the opportunities within the power industry for growth and prosperity. Okay. Now, recently, Dangote's largest commercial venture, the Dangote refinery, was commissioned in Lagos using electricity from its own power plant, insulating the refinery from relying on the outage-prone Nigerian grid. So you read that correctly, ladies and gentlemen. You heard that correctly if you're following along, if you're reading. And you can see a link for this on the nationonlineng.net. And the title is He's Right. Netizens React to Dangote's No Power, No Prosperity statement. So electrical grid power is necessary infrastructure for prosperity to exist. And we've got the richest man in Africa building his own electrical grid to ensure more stable functioning of industry. So, what is my read on this? Well, that means that the energy industry is in for a major shakeup, and this is going to lead to more positive ties with BRICS. Why? Because they control an outsized percentage of the world's energy, and they can easily supply it to Nigeria if called upon. Problem is, how are they going to get it there with all these problems raging throughout the world? Well, that port in the Red Sea that they just secured from Sudan could have something to do with it. So just keep that in mind. Moving on. And this is another explosive article from The Guardian. And title of the article, and this is an exclusive from The Guardian. Israeli documents show expansive government effort to shape U.S. discourse around Gaza war. The Guardian has uncovered evidence showing how Israel has relaunched a controversial entity as part of a broader public relations campaign to target U.S. college campuses and redefine anti Semitism in U.S. law. It included 80 programs designed to carry out what Israel called, quote, mass consciousness activities, close quote, targeted largely at the United States and Europe. Its latest incarnation is part of a hardline and sometimes covert operation by the Israeli government to strike back at student protests, human rights organizations, and other voices of dissent. Voice's latest activities were conducted through nonprofits and other entities that often do not disclose donor information. From October through May, Israeli Minister Chikli has overseen at least 32 million shekels, or around 8.6 million US dollars, spent on government adequacy to reframe the public debate. And this is on the tails of a company out of Israel that was hired to target US lawmakers with fake accounts to mainly to target black Democratic lawmakers. So now they're not just targeting Congress, they're targeting us, because they realize that the game has changed and the only thing that they have now is propaganda and force. So expect more of the same from that. But you know, even a mortally wounded beast is dangerous, ladies and gentlemen. So just keep that in mind. Moving on. Iran and Russia have signed a currency agreement. And this is more about BRICS. Right? And this is based upon the information from the head of the Central Bank of Iran, whose name is Mohammad Reza Farzan. At a bilateral meeting of the heads of the central banks of Iran and Russia on the sidelines of the Financial Congress on the Bank of Russia, which took place on July 4th in St. Petersburg, a foreign exchange agreement was signed with the aim of providing exchange liquidity to national currencies for commercial transactions. And he added that Russia and Iran have completed the work on the integration of the Russian Mir and Iranian Shatab payment systems. Shatab cards owners will be able to withdraw rubles at Russian ATMs from August 22nd, and later, Russian citizens will also be able to use Mir cards in Iran. This is massive, ladies and gentlemen. This means that Russia is opening up its entire economic resources to Iran. They have made the decision to arm the adversaries, economically prop up the adversaries, and expand their soft power globally in an effort to stop global war that is currently being threatened. And part of that is economic ties. And Iran has had almost no GDP growth at all over the course of the last 20 years. And that's about to change, ladies and gentlemen. So keep an eye on that. Moving on to the Sahel in West Africa. I've discussed the Sahel a few times over the course of the last several years, but just to friends and folks prior to the time of me joining this podcast, but it's starting to become much more geopolitically significant as a result of, as I've stated in previous podcasts, its geographic proximity to the Eastern Mediterranean. Now we've got 3 African countries now, which are Niger, Mali, and Burkina Faso. They have founded a confederation, and this is a quote from the announcement of this confederation. Quote, "Together we will strengthen the foundations of our true independence, the guarantee of true peace and sustainable development, the creation of the Confederation of the Alliance of Sahel States. The AES has enormous natural potential, which, if properly harnessed, will guarantee a better future for the people of Niger, Mali, and Burkina Faso," the 3 countries said in the statement. The agreement was signed by the military leaders of the 3 states. They previously signed a security treaty and also announced their withdrawal from the West African Community, ECOWAS. ECOWAS was shall we say, a confederation, a competing confederation that was primarily controlled and backed by the EU and the United States. And as we've seen in previous months, United States military and the French military being thrown out of Niger, they're leaving Mali and Burkina Faso as well, ladies and gentlemen. So the geostrategic arrangements of these troops could spell either trouble, or it could spell an end to conflicts, at least inter-regional conflicts amongst West African nations. But I think that this is more likely if and only if Niger is able to resolve its oil transport issues vis-a-vis China, which continues to be a sticking point for them. So we'll see how that continues to play out. Moving on. And this next one is from a Telegraph article entitled Eurasia Against NATO. Russia leads the creation of the multipolar military pact. Here's the leader. The proliferation of collective defense agreements promoted by Moscow makes it clear that the Russian Federation is creating a kind of multipolar Eurasian pact to counter NATO. Here's some more details from the article. The recent mutual military aid agreement signed between the Russian Federation and the Democratic People's Republic of North Korea, DPRK, also known as North Korea, is part of a wider context regarding Moscow's promise to expand its military support for counter-hegemonic countries committed to creation of a multipolar world. The project to deliver weapons to the enemies of the US and NATO, previously proposed by the most patriotic sectors of the Russian state and now adopted by the Kremlin's highest ranks, can be seen as the first step towards the creation of a kind of, quote, multipolar military pact, close quote, strengthening emerging powers in the fight against the Atlantic axis. So now we've got, remember what I said in previous shows, ladies and gentlemen, about how Eastern Europe is turning hostile to Western Europe. It's turning hostile to the Eurocrats. It's turning hostile to the United States of America. And this pretty much proves that they are aligning themselves militarily, economically, and politically with Russia and with BRICS. And these are strategically irreversible decisions. So I expect more spy versus spy fun times. Anybody joining these particular alliances. But the ability to meddle in the affairs in this country is continuing to be decreased day by day. So more alliances are being formed. And my read on this generally, in terms of everything that's happened, is that this is being done specifically to prevent the breakout of wider conflict, as Russia's publicly stated that the only way to prevent global war is to massively arm all of America's adversaries. And now we've basically got the Cuban Missile Crisis on steroids. And it's not just Cuba, it's any place we're, eyeballing for colonization, essentially. I say we, I say the United States government. It's not talk about most average Americans. Unfortunately, many people in the West seem to still support this system to their own detriment. So we'll see when and where honor will come from and how it will return to the West. We shall see. But it's not going to come from the establishment, ladies and gentlemen. It's going to come from intelligent ways to diplomatically defuse things. And this is what we used to be known for. It's what we need to get back to so we can learn a lot from our Eastern neighbors in this time rather than lash out at them. Moving on. Another snapshot from a Cradle article, and I've got two more talking points. This is the second to last, ladies and gentlemen. So we're almost at the end of my part of the show. And this is a really revealing set of quotes from the leader of Ansar Allah, whose name is Abdul Malik al-Houthi. And there are 10 specific talking points to go over here. First, the Saudis must realize that they're reckless. These are direct quotes from Mr. al-Houthi. Quote, the Saudis must realize that their reckless, foolish steps cannot be tolerated, and they must get off their misguided path. The U.S. sent us messages that it would push the Saudi regime to take aggressive steps against us. There were American visits to Saudi Arabia for that reason. Pressure to transfer banks from Sana'a is a crazy and stupid step, and no one in the world thinks this way. Saudi regime took this step in service of Israel and in obedience to America. After the step of transferring the banks, the Saudis decided to disable Sana'a airport and stop flights, despite their limitations and narrow margin. We will respond to everything in kind. Banks for banks, Riyadh airport for Sana'a airport, and ports for ports. The Americans want to involve Saudi Arabia in a comprehensive war, meaning that the situation with us and Saudi Arabia will return to what it was at the height of the escalation. He's referring to the war that took place in the 2010s targeting Yemen. That was initialized by Saudi Arabia and financially and militarily backed by the United States of America, among others, including Emirati states. Continuing, our people endure because they believe there is an important battle and because they prioritize the Palestinian cause of their own. Saudi media clearly serves Israeli interests. The Saudi regime still detains Hamas members in prisons and criminalizes the movement's stance against the enemy. We offered the Saudi regime to release their pilots in exchange for Hamas prisoners, but they refused for the enemy's sake. And this statement was to the KSA. The Americans are trying to entangle you, and if you want that, then try it. If you want good for yourselves and stability for your country and economy, stop your conspiracies against Yemen. Move towards aggressive escalation against our country is something that we can never accept. If the Americans succeed in entangling you, it will be a terrible mistake and a great failure. It is our natural right to counter any aggressive step. If you get more entangled, our escalation will be greater, and do not rely on the Americans. They are failures. So this is a very strongly worded warning, ladies and gentlemen. I also covered or attempted to cover an exclusive Mint Press News article before our furlough, and I may come back to that in future shows to dig into this topic a little bit more deeply. But what they're basically saying is to any Israeli or U.S. aligned regimes in the Ummah generally is to mess around and find out, essentially. And they are proving it because they were able to get a U.S. aircraft carrier so bogged down with attacks that it returned to its home port in Norfolk, Virginia, and withdrew from the fight. And that brings us to our last talking point of the day in relation to the Eastern Mediterranean. This is from a Haaretz article that was published on June 30th, 2024, Israeli newspaper. And title of the article is as follows, quote, Israeli ministers approve law that would reserve administrative detention for non-Jews, close quote. And goes on to state that, quote, the proposed law says that an administrative detention or detention without trial would only be allowed if the person belongs to a, quote, terror group, close quote, that aims to destroy the state or harm its citizens. Between October 7th and May 1st, 10 Jews were put into administrative detention compared to 2,733 Arabs. These are official numbers. I don't know where they're getting them from. It's not referenced. The article is authored by Noah Spiegel. So have a look at that. So what does this mean? Well, administrative detention is also rendition, where you're kidnapping somebody without charges. If this was to happen in the United States of America, it would be called false imprisonment and kidnapping, and would lead to federal prison time for anybody doing it. So, for anybody that's listening to the show that is confused as to why there are such stark differences, if you look at the domestic policies of this particular country and compare them to our own, there are very little similarities to be had there, because anytime that you arrest somebody and keep them in prison without trial or charges, you're breaking the law, right? But unfortunately, natural law is not something that is easily absorbed or understood in this context with this particular country. So it's very important to understand and realize that any country that's doing this to its own citizens, that proclaims its greatness on the world stage, won't stay great for long. It's as simple as that. And speaking of staying great for long, the United States now spends more outflows on interest on the debt than it does on defense spending. Every moment in history where interest on the debt exceeded defense spending led to a collapse of the empire. Two examples include the British Empire and the Ottoman Empire. Keep that in mind, ladies and gentlemen. With that, Jason, I will turn it over to you for Q&A and TA respectively. Back to you, sir.
All right, Chris, I appreciate that. Enlightening and eye-opening as always. A lot of stuff to take in, so I hope everybody appreciates what you're bringing to the table every week.
A lot of effort goes into these podcasts, ladies and gentlemen. I'm looking at this stuff on a daily basis, so you don't have to. So come back here, and I'll take care of you.
Yep, for sure. And, with that said, hopefully you enjoyed the news that Chris brought you. If you're hanging out with us, I really would ask you go ahead and honk the like button for us. And if you're not subscribed to this channel, make sure that you are. Hit the bell for notifications as well, because that's going to get you notified when we put these types of things out. We do these podcasts typically every weekend, and I will provide updates throughout the week as I'm able to. So, with all that being said, let me flip over to some TA here, and I'm gonna dovetail into the S&P because we were talking about what Mr. Jamie Dimon was saying about a potential market crash. And we're getting to a point here on a macro level where we've made a pretty large move, right? So if any of you were with us last year, when we were just starting to do these podcasts, I did talk about a larger formation here. And this larger formation was essentially a falling broadening wedge. And this falling broadening wedge produced this breakout. Okay, we had a breakout, retest, and then we had this impulsive move, right? Well, that impulsive move created this flag, this fractal, and I pointed this fractal out on the podcast, right around this time. I believe it was probably around October last year. Don't quote me on that. Unfortunately, those recordings are no longer available due to reasons that I won't go into right now. But with all that said, if you were with us, you may remember me talking about this flag. Well, now this flag has produced an impulsive move, essentially a fractal, type of a movement. And the 2-week chart on the S&P right now is showing that we've, created some significant upward momentum for the market. Now, if you're to take an accurate measured move here of what the breakout of this flag would be, it's actually north of this 1.618 Fibonacci extension. This extension I took from the bottom here, the bottom that I called in 22 on the S&P. If you were listening to anything that I was saying at that time, I called this out, and this has since created this incredible upward movement that honestly we, really haven't seen probably since the dump in 2020. That sort of a panic level bottom where we saw an impulsive move up, and then we saw this consolidation, and now that consolidation has bounced cleanly off the 200 weekly moving average, and here we are months and even years later from that bounce. We are now reaching the 1.618 Fibonacci extension that was mapped out from the bottom of that move. So if you take a look at where that may potentially take us, that move right now, the measured move, is not too far from where we're at. So you would expect to see some resistance where we're at, and that's where the 2-week candle is kind of bumping up against it. And I mean, you can see it literally. It's literally right there. So you ask yourself right now, are we at resistance? Are we going to drop from here like JP Morgan said? I think we still have a little bit of a ways to go. And the 2-week stochastics are telling us most likely that we still have to complete some type of a move here, as those are pointing upwards. So we'll have to get in on smaller time frames and see how we tackle this 1.618 extension. If there's any type of a pullback here, sideways consolidation, maybe we see something like this where we move in like an ascending triangle for a little while and move sideways. But I do expect this to flag out, if nothing else, and make this final move up towards about 5,900, and then we can potentially look for some retrace in the S&P. All right, so we'll take a look at smaller time frames, and we'll see what the daily has to say. You can see momentum coming in on the daily right now. So the daily may be giving us the momentum to create this type of a move here to about 5,900. Daily stochastics look good. The bounce on the RSI looks good. So all this is really mirroring what we kind of are seeing on the larger time frames. And we'll see where this takes us if this measured move completes, if that area even flips into support. But if we zoom back out here, I just want to show you how this was contrived. This measured move here is taken from that bottom. And that might be a little aggressive, actually, now that I think about it. I wonder if maybe that was a log move or what I was looking at there. So that pole was actually a little longer than I was planning on. So let's readjust here. So this pole actually will go to the top of that move, and I wonder if that's going to take us directly to where we're at right now. And oh, look at that. So that's super interesting. All right, so that changes up my game plan here a little bit. So we may actually be at resistance, folks. We'll continue to monitor that. If there's any divergences coming in here or anything that we have to be concerned about, we'll find that 4-hour time frame there may actually be a little bit of divergence coming in here, a little bit of bearish divergence coming in. So we'll keep an eye out for that. All right, so that changes things up a little bit. That's why you always measure and remeasure. Okay. So we'll bounce in between, take a look at the weekly. The weekly looks like it still has momentum. I would like to see break of that line instead of rejection. So monitoring this right now, 1.618 fib, potential macro resistance. Next potential level would be 5,900. I'm not going to take away that level just yet. And it may have been, let me see here if I have a different way to figure this out, because sometimes there's more than one way to skin a cat, right? So if we look at this as a cup and handle, that measured move actually takes us north of that 5,600 that we're at right now, and look exactly at that level. So I knew I wasn't completely out of my mind. There always has to be some sort of logic to what I'm trying to do here. But that will be the move there, potentially. So that's like your next possible level if we're able to break out of this and potentially establish it as support. So you know, that's your macro and daily on the S&P. I hope you appreciate that technical analysis if you're in the S&P or looking at the larger markets as a, you know, guide or, you know, a reference to kind of see where, you know, the liquidity is kind of moving, right? Because if this isn't moving up, then Bitcoin can't continue to move up. If this is bearish, you know, like it was in 22, Bitcoin's going to be bearish. It's, you know, 99% of the time going to follow that. There's some small deviations here and there. Sometimes you'll get a pump that precedes or, you know, front runs or runs a little bit behind. But for the most part, they run together, right? So keep that all in mind. We'll jump over to BTC. On the weekly here for BTC, we are severely oversold on the stochastics right now. We are printing not one, but potentially two drives of hidden bullish divergence. One obviously is stronger than the other. Okay. Clean this up a little bit. Seems like our head and shoulder there was a bit of a fake out. So what are we in right now flag wise? What can we expect here? Are we in this thing here, which is really a bit of a falling broadening wedge? This is more like a bull flag. Alright, that has the type of tilt that you would look for. The hidden bullish divergence for continuation. And the weekly close appears to potentially be bullish on CME. Let's see if there's any gaps there. You have a really nice bullish divergence here on the daily. That is yet to confirm, by the way, but it's looking pretty good. See if there's any gaps on the 4 hour. This inefficiency was filled on the move down. So there's no inefficiencies on the move down. CME looks like it can move up. You know, your next level of resistance is going to be like this little volume node that sticks out here, like just around the 21 MA. You got this closure here on this candle, these closures here, right? So that's just basic support and resistance. So somewhere in that area, 58.7 to about 59, I would look for the next level on CME, with the 4 hour looking fairly bullish. You can see here as well. Clean this up here since we zoomed in. But you can see this bullish divergence here on the 4 hour as well. So that's actually a really nice divergence, and I would expect that to actually play out most likely above that POC there that just kind of shifted. But if we look at that sort of locally, let's run just a local fib on that. And you can see that POC is just above the golden pocket. So if you bounce above that, flip that into support, that level's around 61.3. There's also some resistance around 61.9. You can see that's where that inefficiency kind of started at. Let's say if you flip that area into support, call it 62K. You'll see significant momentum come in for Bitcoin and potentially a move up to around 65, 66, maybe even 68K. All right. And there is potential for rejection from there. If we look at this move here, which right now I'm not sure if I'm trusting this move completely. If we get rid of this localized fib here, we did not get a move down to the golden pocket. And when I see these wicks sometimes and they don't make it to the golden pocket, we don't get that move to the golden pocket, sometimes you get a further move to the downside. So you're going to have to watch for rejection in this area, even around this high volume node 62, 63. But right now, this is the formation, this is the flag that's holding. You could potentially come back up, retest the top of this flag, or if we get like a daily extension going, you could see a more macro rejection around this area somewhere in here. So, 0.5 fib, typically a dead cat bounce area. That's the 63.2 area that I just mentioned. If you're rejected at the golden pocket for any reason, that's at about 66K. So that's those levels that I just outlined there. If that area around 66 to 67.7, call it 68K, flips into support, most likely we will begin a new uptrend. So keep that in mind. All right. We do have this daily bullish divergence that's starting to try to form. So we will keep an eye on that. The stochastics, however, I do not like on the daily. I don't like that, and I don't like the fact that we did not fully retest the golden pocket or the 200 daily moving average on CME. However, if we flip over to the Bitcoin USD chart, we did indeed not only retest but broke below the 200 daily. We're now bumping up into it as resistance with a couple candles bouncing off of the bottom of that, one green and now one red. So as we're about to close the day here, probably just below 57K in a couple hours, it would be nice to see that bounce initiate that this bullish divergence looks to be creating. So as we move over to the USD chart, away from CME, it looks a little different, but not too different to the point where we're like, hey, this is, something that we need to look at. So right now, this looks like healthy consolidation. Let's take a look at some of our moving averages on a smaller time frame. Right now, the 7-minute is trying to bounce, but I'm not really seeing the divergence I would like. Let's see if there's anything on the 15 for us. We did see this little kind of a flash move as we were initiating the podcast. It looks like that move's probably done with for the moment. But the question is, where's the divergence, right? So if we look at this swing low here, that looks to be creating some hidden right there that's holding us up. So that's the hidden bullish that's holding us up for potential continuation here. Are we now forming the right shoulder? In that pattern? That measured move would take you right up to this level that I had mapped out here as a previous level that we could drop to at 63K. And you could see that that was resistance over here as well. So, again, that area that I had talked about, 63, 63.2, there's going to be some significant resistance there. So watch for that one. All right, watch for that one. Bounce back real quick, just kind of get a little further grasp on our moving averages. Sorry. So we're below these key moving averages on the 15-minute. All this stuff is getting pretty tight. So when it gets tight like that, typically you're going to see a move up or down, depending on where the price action's at. If the price action's below, moving averages are tight, probably going to see a move up. If the price action is above the moving averages while they're tight, then you may see a move below. So the short-term move here is just to the 200 daily. That resistance is at like 58.6. So if we flip 58.6 to support, we'll take a crack at 60, potentially 63K. Those are the levels for BTC. To the upside, for any reason that's compromised and this, formation breaks down, you're looking at least retesting this level around 53. If that breaks out, your next levels of interest would be 51.9, 49.9, 48.3. From there, it would potentially get ugly, as you would probably see a volume gap down. There's some support at 47. The next level would be around 42 and 39. Is that possible? Yes, it is. That is the measured move of the double top breakdown. If this is some sort of a reverse Adam and Eve or a double top or something like that, 39 to 40K area is totally possible with a bounce off the 200 weekly moving averages that would be curving up and would take some time for that move to play out. All right. In terms of the daily, when we zoom out and we look for divergences, other than the one that we were looking to potentially see confirm here, what you're probably looking at is this hidden here. So I do like hidden bullish into bullish. That typically gives us a strong move. So when we look at this swing wick down here, that's from the 39K low. So this is either a level that will be retested as a double bottom if this formation completes, this double top, or if we're hitting a bottom in a potential Wyckoff type of a accumulative move. There's different types of breakdowns in these Wyckoff moves, and we are still within the potential of a Wyckoff accumulation here. As long as we hold this level holds, well, we'll see a pretty nice bounce from here. But if it doesn't hold, those are the breakdown levels. So you've got 51.9, 49.9, 48.3, and a volume gap down from there to 42 and 39 to 40. So if I had to place a likelihood now on the scenarios unfolding, I would say it's about 60-40 we bounce from here, and a little bit less than a 40% chance now that we would see any of these lower levels. I think it's becoming less likely day by day. Most likely the bears made their move for this month, and we will have to see as the move plays out over the next 48 hours or so into false move Monday, how things kind of bounce from there. But there is potential for a third scenario, sort of a third scenario, right, where it would just be more sideways and ranging sort of in this area here. So if we were to come up, kind of get rejected at that level, come back down, sweep up again, maybe come back up and finally break out. Then maybe potentially you'd see something like that where you could see a nice ascending triangle or bull flag get you out of there. But I'm not sure we're going to see the V that some people were looking for or an immediate recovery. It may take some consolidation, so keep that in mind going forward. I'm going to jump over to dominance for BTC. And we're just continuing to kind of move in this sort of a sideways thing. It's trying to be a head and shoulders, but I don't think it is. Sort of a bit of a symmetrical triangle right now, so it just is looking like continuation sideways. This hidden bullish played out, lower high, higher low. This is kind of telling you nothing at this point. This is just, the RSI is just all consolidative, right? So there you go. It's chubby triangle. It's going to move one way or the other. Take a look at tether dominance. 4 hour for tether dominance, actually scooping back up. So this looks like a retest potentially of this breakout move. So what we would really want to see, you would want to see this as some type of fake out. At the worst, you come up here to like 5.6 to 5.7% and then lose the top of this area here. Okay. But right now, this actually looks like a bullish laddering type of thing for tether dominance. Zoom out a little bit. Might get some bearish div coming in on the daily. That would be what we would need to save us there. So, and when you look at this candle, this is the type of thing, this spike here, where usually you're going to lose it. So, if you print, lower high on the RSI, a little questionable, to be honest. It's a really, really interesting formation, though, with this long wick. Typically, you would see that drop off. So, I mean, I guess, if you come up here and create a higher high on this candle, right? But you're not cracking resistance or creating this low on the RSI. Maybe that gives you the bearish div that you're looking for. Like, would we see that come through on the 4 hour? Again, I mean, potentially you got to wait for this move to kind of play out. This actually looks strong to me because you got this scoop here. So it doesn't really look all that bullish right now. The altcoins are taking a hit on the daily candle as well. Unfortunately, this just isn't good. What I'm not seeing right now on the daily is the bullish divergence that we're seeing potentially for BTC. So that's a bit concerning for the altcoins. At least in terms of the market cap. I mean, it's wanting to bounce, but you're not seeing the divergence there on the daily. So, was there something kicking in on the 4 hour? Like, no, it's not there. So this looks weak right now. You're getting retracement right now. Locally, you really can't lose this level, say around like 525 billion. That coincides with these candle closes here and the 786 fib. I would say if that breaks, you're going to come down and retest this 200 weekly. Would that be a healthy move? Yeah, it actually would. So don't be surprised if that happens, because if you look at this move here, that move in and of itself can be construed as like, rejection at the golden pocket. So you got to get back above that 0.5 fib, like 563 billion, in order for this to start moving back up. And again, the line in the sand will be around 526, 525 billion for the altcoins and the total 3 market cap. Let's jump over to ETH. Uh, Largest altcoin by market cap, and the weekly chart is starting to take a beat down versus BTC here. So you were getting good support at the 21 MA on the weekly, and that is kind of seeing this movement here where you're going to see this much lower close. The stochastics are looking kind of weak, and then the dreaded cross down of the 50 level of the RSI on the weekly typically denotes some weakness. If we take a look at the last time we had a move like that, was this area here where we came up, came back down, lost the 50 level, tried to come back up, or denied there, and then had that long move down. So that's not the most bullish indicator for ETH BTC. We'll have to see how that plays out. What you would want to see if you're bullish on the pair would be retracement like no lower than this level here around 0.048. Below that, you're likely going to see a breakdown. So if we look at Ethereum versus the dollar, let's jump out to the 4-hour here. We're seeing similar price action where things are kind of weakening. The hope will be when we get a close here in an hour and a half that this holds itself up. Again, that is hope or hopium. You are below the 200 daily. Really the key level at this point, Ethereum has to get back above 3,100 and that 200 daily moving average to really flip bullish again. Otherwise, you're below the 200 daily and bearish. And you also dropped out of this flag here. Came back up and bearishly retested. So if you get back in the pattern and back above 31, you got a chance to, you know, potentially like W out, right? So if this were to come down, if this were to come down, come up, come back down to that level that we were talking about, where there's some support on those candles, and then W out, it will probably take you right around the golden pocket, you know? A little bit higher, actually. So that's a potential. All right. But you probably got to hold this level here, say 2,900. Let's call it 2,900 you got to hold for ETH to potentially get a bounce versus the dollar. Let's jump over to BNB. This picture probably isn't going to be too different. You're getting some retracement on the 15-minute right now. I haven't seen a retest again yet of the 200 daily since it looks to have kind of been a retest and a bounce there. So above that technically for BNB, bullish. All right. You got the wick down in the retest there. So technically bullish for BNB. And you could say like, you know, where's the divergence at? realistically, this hidden goes way, way back here. You had this kind of swing down, right? Even further back. That was the low. So it goes all the way back to the low where you had a bullish divergence here. So this, and I love looking at BNB to be honest, because I don't know if CZ's dropping breadcrumbs for people or what he's doing, but this chart has definitely shown some things in terms of how the market is moving. So, if BNB is going to move up, Bitcoin will likely be moving up too, along with the rest of the market. So this looks like a potential continuation hidden bullish divergence here on the daily. This is really, really strong going back to the market low for BNB at just above $200. So definitely heed this. You've got a situation here too where this candle is closing here and where the RSI is at on the daily. If we close at this level in an hour and a half, this actually is going to print a bullish divergence. And what that would give us is that really strong hidden bullish into bullish, again, that I really, really like to see for reversals. So let's keep an eye out for that. That's a positive sign right there for the market. I did have a couple requests for a couple altcoins, larger caps in the Discord. So shout out to Xavier. He did want us to take a look at CAS. CAS looks to me like it's kind of breaking out and retesting. You got this cup handle. You had the breakout here and potentially retest of the handle right now. So what you would want to see is a healthy retest there. In terms of like your retrace, right, on this move where you created the cup, this was healthy. You had a wick just below the 786, so nothing terribly bearish there. This looks like potential continuation on the 4-hour forecast, but it never really dumped that hard when the rest of the market just went to absolute shit. So if you were holding Caspa and you bought it anywhere, below these levels, below say 13 cents, you're sitting pretty good there. And right now you're getting this retracement, right? So if you look at where the current retrace is going, if we delete that one and we look at this a little more locally, the current retracement is seeing some support at the 0.5 Fibonacci. It's funny how that works, right? So if that breaks, you do have further support here where this candle closed, right? And then it's in confluence at this area over here where there was a breakout of this inverse head and shoulders, created this impulsive move, which then led to the handle for this cup. So if you come down here and retest this level just below the golden pocket, or even at say the 706 fib, where you have this high volume node in this area of what was resistance, which now technically is support at about 15.5 cents, 15.5 cents, you can come back down here and this is totally healthy because it constitute essentially a retest of this breakout. So keep an eye out for that for Caspa. Can it hold that level and essentially, start and initiate this breakout for this cup and handle? Next targets would be, 20 cents, 22 cents, and the more aggressive move at 25 cents for Caspa. All right, I'm going to move over to AVAX. And let me just play devil's advocate here. Let me just be a jerk. Right? And we'll take a quick look like, do we have to get a retest of the 200 daily? Do we have to break down a little bit further? What's the next level? If we get breakdown, next level would be like just below 13 cents, about 12.8 cents. And below that, 12 cents. If we had a really catastrophic drop in the market, maybe see Caspa at 10 cents, maybe put in a low ball bid just above 10 cents. See if your order gets filled. I think it's looking less and less likely. This is looking more like cup and handle, continuation, etc. for Caspa. But just in case, if you want more Caspa, if you want to put in an order around 10 cents, make it filled. All right. So AVAX, I was plotting this out, and this looks pretty interesting. There's just a few things to note here, and I don't want to make it too complicated. All right. So there's these levels in kind of the chop here, just above where we're at. There's some resistance at 28, 32, 36 to 37, and around 42 to 43. So those would be the next levels. I would think if you would break out of that, you would see an impulsive move for AVAX. That impulsive move would probably take you close to around $100. Now, the way this is moving right now on the 3-day, there is actually a bullish divergence, which to me has confirmed with this green candle and a retest of this sort of a line here, which goes back to this level here, right? So to me, this is breakout and retest. All right, that's my um, that's my technical perspective on the pattern right now. So if that is indeed breakout and retest, this bullish divergence holds. This is going to give you, a move up. So, you have levels in between here and $100, 61, $62, another level around 78. All right. Those are your key levels. Above that, AVAX is going to get very bullish, and I believe put in a new all-time high, $150, $175. So, realistically, I would say this is probably something, if you have any conviction with it, maybe accumulate a little bit more. If you're down, you can average in. To me, this is a project that can hold up through the bull run and probably will. So, as always, nothing that I'm saying here should be construed as financial advice. Get yourself a financial advisor if you're concerned about such things, and do your own due diligence and research before jumping into any of these coins, any of these odd investments, projects, or trades that we take a look at here. But AVAX, in terms of cryptocurrency, probably on the lower risk end, quote unquote, at least in terms of how low risk crypto can be, as this is a larger cap coin. It does have some infrastructure plays behind it. Large players like Alex Becker that have talked about, the fact that they have conviction in the project, and, meme ecosystems and other things that are being built on it, gaming ecosystems. So if you have conviction with AVAX, I would say this is honestly a good spot to buy, because you're coming down, where you essentially pretty much wick to a level that I had lined out here as like a, pretty critical support level. So held just above 20 at about $22, and this doesn't look all bad to me. It just doesn't. I don't have any way to say that this is like the most horrible thing that I've seen. In fact, you do have what could be construed as some hidden bullish into bullish forming here. So, just keep an eye out for how this develops. But I do actually like the accumulation on this pattern, and if you really wanted to, you could potentially call this a falling wedge. It's kind of sharp, but just keep an eye on it. All right, so those are your levels for AVAX. One more thing that I just wanted to note, silver did get the breakout that I was looking for. There is hidden bullish holding everything up on the 3-day chart. Stochastics are getting the scoop there. You've got this closure here on this pretty large candle. The only thing I will say is you're probably coming up to around like golden pocket extension. So locally you can see here that it did bust above the golden pocket, but if this forms into support, the way this stochastics look and the way this divergence looks, silver is likely to make the full measured move that I had laid out to just below $36.50, maybe, $36.40 area. So you'll see some resistance come into around this 1.618 fib. And that's going to be just below $35. So keep an eye out for that for silver. These markets are getting ready to cook, folks. Regardless of any volatility in cryptocurrency or short-term downside, I fully expect to see a more extended bull run towards not just the end of this year, but also into next year, and probably well into the end of next year with altcoins, at the very least, if not Bitcoin. So that's what I'm seeing, folks. That's what I'm sticking to for right now. Any bags I'm down on that I have a conviction on, I'm accumulating. I think this is an area where you can even talk about accumulating BTC below 60K, because I do see 80 to 100K BTC and possibly 175K as a final top bull run target for BTC. If we take a look here, I did have not just 84, 113, but 175 mapped out, and I did cover that in my update for the macro that I put out a while back, so you can take a look at that. Just want to throw a little bit of hopium in there at the end. Don't feel like this is the end of things, folks. Most likely we're going to be looking pretty good here within a few months. Just give the market time to consolidate and find a bottom. If it's not here in the low to mid 50s, it's going to be somewhere here around 40K. Some people are saying that would be a new bear market. Technically, to me, I feel we're still above the 200 weekly at that point. It's a consolidation range and an accumulation range where the ETF came in. Retesting that level is not impossible for us to continue up from there. Just my personal opinion. With that, I am your host with the honks, Jason Bruce. I'm going to get honking on out of here on this lovely Sunday. I hope you've enjoyed your July 4th holiday weekend. I hope you've all been safe, spending time with family and friends. So take care, folks. Much love. God bless as always. We will be catching up to you soon, and take care of yourselves.